Let us begin with chapter one, the manager and management accounting. And I want to specifically cover a couple of things as we begin in chapter one, which kind of sets the environment for us on where we're headed. And there will be some discussion of some of the managerial and some of the cost accounting terminology that we're going to be utilizing. And then as we get into chapter two, we're going to jump headlong into all of that material. So let me go down and make some distinctions for us as I had indicated before, explaining where there are differences between management accounting and financial accounting. And so we look at the accounting discipline overviews we have here on this slide. We see that management accounting measures and analyzes and reports financial and non-financial information. That's an important distinction as well, right? So management accounting is going to deal with financial and non-financial information that primarily helps managers to make decisions to fulfill organizational goals. All right, so management accounting, another big distinction is that it is not concerned with GAAP compliance. Okay, managers use this information to develop, communicate, and implement strategies, right? So you see a list of things here that we may utilize this information to coordinate. We see product design, production's a big area, marketing decisions, and we'll spend quite a bit of time talking about production because we will deal with what we call product cost. Okay, and so that is going to be an area we'll spend some time on marketing decisions such as pricing, right, and evaluating a company's performance. Financial accounting focuses on reporting financial information to external parties such as investors, etc. At this point, we should understand to some degree what is reported under financial accounting. This is where we find all of the GAAP financial statements, an income statement, a balance sheet, statement of retained earnings, statement of cash flows. All right, and this is what is utilized by external stakeholders, such as creditors and investors. Cost accounting measures and analyzes and reports financial and non-financial information related to the cost of acquiring or using resources in an organization. So cost accounting, management accounting, and let me just put that here so we can see this. So cost accounting, right? Management accounting. I might even use the term managerial accounting. Okay. We're generally talking about the same thing no matter which one of these terms that we're using. So this is what this statement here is saying, that most accounting professionals take the perspective that cost is part of the information collected to make management decisions. Therefore, there's not a real clear distinction between these various terms. So cost accounting, managerial accounting, all means the same thing. I want you to take a look at this slide here. Major differences between management and financial accounting. Now, this is where we make these delineations between the purposes and uses of the various pieces of financial data that we're going to deal with. So I want you to compare, take a look at this and compare these items here on the left: purpose of information, the primary users, focus and emphasis, etc. And let's talk a little bit about some of these differences. So under purpose of information, under management accounting, and let me flip it. Let me do financial first, which we're familiar with, and compare that to management accounting. So financial accounting, primarily concerned with communicating an organization's financial position to external stakeholders. Management accounting, primarily concerned with helping managers make decisions. We might even say primarily concerned with internal stakeholders. Primary users, again, under financial accounting, external users. Under management accounting, internal users. This term, internal users, we normally just refer to them as managers or management. The focus and emphasis and financial accounting, it is all past oriented. It is backwards looking. We are collecting information. We are recording that information. We are compiling that information, and we are presenting that information about past transactions, past performance. So reports prepared in 2017 are reporting on what happened in 2016. Reports prepared in 2020 are reporting on transactions from 2019. The focus and emphasis of management accounting is future. It is all about using current data to predict future behavior, future performance, and to enhance future decision making. So future oriented, things like a budget, right, that we will prepare in 2016 for 2017, prepare in 19 for 20. The rules of measurement. We know that for financial accounting, we are looking at GAAP. When we look at management accounting, internal measures, you don't have to follow GAAP based on cost benefit analysis. And what I like to say is, when we talk about the rules of measurement, how we measure, how we report, from management accounting perspective, it's whatever the heck you need, whatever you want to see, however you want to cut this thing, however you want to slice it and dice it for whatever purposes you need it for. So if you are a manager in sales versus a manager in production versus a manager in, let's say, a maintenance engineering department versus company executives, same set of information, different uses or different purposes, different reports, different measures. When we look at the time span, again, we know for financial reports, we do annual reports, we may even do quarterly reporting. When it comes to management accounting, again, it's whatever you need. It varies, right? So we see here, you could be looking at 15 to 20 year periods. You could be looking at 3 months, 6 months. You could be looking at hourly information, right? So let me tell you, in my company here, this is a manufacturing facility, and there is information that we are collecting every 8 hours from our production environment. It's the only department that is collecting information that frequently. Others may report on a weekly basis, others may report on a monthly basis. But for production, it's every shift, every 8-hour shift. And so we get an 8-hour report for what was produced and various metrics that we're looking at. So I have 3 reporting windows every day that we are running production. Okay, so compare that to financial reporting, which is periodic. The behavioral implications. Again, for financial accounting, primarily reports economic events, may influence behavior because management's compensation is often tied to these reported financial results. But it's primarily simply reporting economic events. Management accounting is designed to influence the behavior of managers. One of the things that we're getting after is if we can measure what we are doing and how it impacts cost, how it impacts profit, then we can begin to address the behavior that is causing costs to go up or profits to go down or vice versa. Okay, so what we are measuring and looking at on the management side is how do we influence behavior to bring about improved performance. All right, and so there you have it. Again, examining the differences between financial and management accounting.